You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koós, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
Happy Friday, everybody. Today, we have a solo cast. That's just me all alone by my lonesome, and it's just for business owners today. We're going to have a few tips on how to save money on your retirement plan at work. And there's a lot of things to talk about with what some business owners are going through this year, especially some of those businesses that are actually doing okay and being resilient through this very, very tough, crazy 2020 that we're living in. But at first, we always have to go through our housekeeping items here. So if this is your first time listening or watching, thank you so much for joining us. The Cash Podcast is produced weekly, and as stated in the intro, Cash stands for creating affluence, success, and happiness, and that's our mission. We want you to learn a little bit more each and every episode so that you can be more successful, wealthier, happier, and more educated than you were before you started listening today. So come back often. Feel free to subscribe on both YouTube and iTunes. In addition, you can also follow me on Twitter at Adam Koós, as well as Instagram at Financial Surgeon. And then last but not least, we're going to have a few slides today. Let me see here, just looks like just 6 or 7. So for those of you listening on iTunes, if you'd like to check those out later, they'll be on our website at libertaswealth.com. But as always, all visuals, charts, and other educational resources are always available on our website. So let's go ahead and get started. Today we're going to be talking about saving money in taxes, specifically related to retirement plans for small businesses. So again, this is focused on business owners today. So if this is not you and you're not planning on starting a business, if you don't own a business, send it on to somebody you know, because I'm going to try and keep this short and try to keep the information really valuable for every business owner out there who's looking to save some money on taxes, costs, or both in a year when things have been pretty tough for a lot of people and a lot of companies. I like to start with quotes every once in a while, and I've got a couple here. The first is Bill Murray. He said the best way to teach your kids about taxes is to eat 30% of their ice cream. So the second one is Mark Twain. He said, what's the difference between a taxidermist and a tax collector? The answer is that a taxidermist only takes your skin. So moving on here, let's get into the meat of the conversation. First and foremost, some problems that succeeding businesses are facing in 2020, and that's what I'm going to focus on today. I understand that there's tons and tons of businesses, several businesses that are already gone out of business. There's several companies that are struggling and have zero interest in a 401k plan, a simple IRA, SEP IRA, owner K. They have no interest in saving money because they just simply are trying to get by and they're living paycheck to paycheck. So I recognize that, and I just want to point that out, that the information that I'm going to share in this episode today is specifically related to those who are doing okay, who are struggling maybe still, but perhaps they're being resilient. They're sticking through this crazy 2020 that we're living in, but they're looking to figure out how to avoid some taxes, how to reduce some costs, and how to keep more income in their pocket. So the first thing that business owners, succeeding business owners, are struggling with are, first of all, their gross income's down in many cases. So I think it kind of goes without saying that in a year like this, you got individuals' income's down, even though we've had unemployment, we've had boosts in unemployment, we've had $1,200 stimulus checks. Still, a lot of individuals' income is down, and therefore the demand for things that business owners sell is down, which is making it such that business owners' income is down. So gross income's down in many cases. The second thing is that expenses are lower in many cases, and you would initially think, well, that's a good thing, right? And it is a good thing. However, when you have expenses going down because maybe you're not doing as much, you're not spending as much money at the company, but your gross income goes down as well. You have to net out the difference between that gross income and those expenses. And in many cases, many business owners are actually going to pay more tax in 2020 for the 2021 tax season than they would in a prior year when maybe their income was high and their expenses were high. So this is kind of a weird problem that's happening right now. I'm hearing a lot of this from other business owners. We are actually experiencing this at our office as well. So these are some of the issues that I think are important that can be solved with some issues that, or not some solutions, I should say, that are out there that I'm going to talk about in a moment. So another thing that businesses are doing is they're reevaluating their overhead. So things like their real estate costs. So if they own their buildings, they're looking at, should I keep the building? Should I sell it? Obviously, Commercial real estate, probably a tough market to try and sell real estate in, not to mention a tough time to rent out your commercial real estate. But if you're leasing, if you're somebody who doesn't own the real estate, which is probably most companies who are renting space from someone else, they're reevaluating leases. They're having employees work from home, looking at that as more of a permanent solution going forward, or at least semi-permanent. So they're reevaluating these overhead costs. They're looking at payroll, seeing if there's ways to reduce costs on payroll costs, insurance benefits, so group health insurance. When renewals start coming up here, which is a different month for everybody, they're looking at ways that they can reduce their insurance premiums at their company. And another thing, and again, this is what my focus is today, is reducing costs and increasing the value and benefits that you get, including tax reduction from retirement plans. So let's talk a little bit about that. Now, first, I just want to go over a few different types of retirement plans and keep this as simple as humanly possible. So first, we've got SEP IRAs. SEP IRAs aren't really all that popular anymore, to be honest. I used to see them more often early in my career, which is almost 2 decades ago at this point. But they were usually for small businesses, under 10 employees. And the way it works is if you're a business owner and you have a SEP IRA, you can put away up to 25% of your income or $57,000, whichever's less. The catch is whatever percentage of your income you put away for yourself, you have to put that same percentage away for each of your employees. And this is why it typically makes sense for a family-owned business where the employees are also family, or at least the employees are so close that they're like family to you. Because if you put away 20% of your income into your SEP IRA, you have to put away 20% of everyone else's income as well who works for you. So that's one option. Another option, Simple IRA. A simple IRA is kind of like a mini 401k. That's what I like to call it anyway. You can put as much as $13,500 into a simple IRA this year. Plus, you can either do a 3% match, and the way the match works is if your employees put up to 3%, they can get up to 3% match. If they put away 5%, they get 3%. If they put away 1%, they get 1%. If they put away 0, obviously they get 0. So they're maxed out at the 3% match. And then the other option is you can do a 2% non-elective contribution, which just simply means everybody gets 2% regardless of whether they put money into the plan or not. Pretty uncommon. Most people are going to opt for the match because obviously everybody has skin in the game then. Not to go back to the taxidermist joke. But anyway, the 401k is the third option, which most people are familiar with the phrase or the name 401k. Tons and tons of choices when it comes to 401ks. You can have matches, you can not have a match. You can have vesting schedules where employees might have to stay for a long period of time before they get the match. They get to keep their own money that they put away, but they might have to wait 1, 2, 3, 6 years before they get the match. And it can be a sliding scale or a cliff, as we call it. So where they, after 6 years, they could take the match with them, but beforehand they couldn't. There are options you can have for eligibility requirements, such as age to contribute. If you're in a high turnover business where you have a lot of turnover in the first year, you can make it such that your employees cannot enroll until after 1 year of service, and this helps to reduce some of the administrative burden that comes around with running a 401k. You can also do profit sharing, which I don't have up here today, but the bottom line simple part of a 401k is that you can put away a lot of money. You can put away up to $19,500 in 2020 on a pre-tax basis if you're under 50, and if you're over 50, you can put away $26,000. So this is a great way for those business owners out there who are experiencing higher or lower gross income this year, but especially lower gross income and lower expenses and thus higher taxes. You can replace some of those expenses with maybe a higher 401k or retirement plan contribution to help get your income back down to a level to where you're not giving away so much of your money. The last option I have here is a owner K. There's lots of names for these. There's single person 401k. I call them owner Ks. But anyway, Uni-K is another one. But basically, these are retirement plans that are just like 401ks in many ways, but they're made for companies where there's one owner, easy for me to say, or just the owner and a spouse. You can't have W-2 employees. You can't have a bunch of people working for you if you use an owner K. So these are for small businesses. Again, one owner, but basically small companies with 1 to 2 owners where the co-owner is a spouse. You can put away up to $57,000. Again, $57,000 into an owner K on a pre-tax basis, so you can reduce your income by quite a bit. And that's if you're under 50. If you're over 50, you can put away up to $63,500. So that's quite a bit of tax deductions here. So in all of these examples, if you're in a situation this year where your gross income is up or down, but especially if it's down, and you're frustrated with the fact that your expenses aren't high enough and you don't want to just go blowing money on anything for the sake of blowing money and reducing your taxes, you can put some of this money in your pocket on a pre-tax basis into a retirement plan to keep that money in your pocket so that you don't have to give so much of it away. And by the way, if you're not sure, and this is pretty important, I should probably have a slide for this, but if you're not sure what your tax situation is going to look like this year, it's September and there's not much time left in this year. Now would be the time to really talk to your CPA and evaluate your QuickBooks or however you're managing your business to determine what things are going to look like between now and the end of the year. Because not only do you have a very short period of time between now and the end of the year to plan for it, there's also deadlines in October to set up these retirement plans that I'm talking about right now. And there's many people out there, I bet, that are just so preoccupied with what's going on in the economy and COVID and running their companies that they may not realize that they could be in one of these situations where they may pay more tax even though their income is down. Obviously, there's a whole lot out there right now, which I won't get into today, but things having to do with stimulus packages and the PPP and the possibility of those becoming taxable as well. If those become taxable on top of reduced expenses, then your tax burden could end up being really high, and you could end up with one of these horrible surprises that nobody wants come tax time. So make sure you're paying attention and make sure you're not forgetting about this stuff, because we're getting close to the end of the year pretty quickly here. So moving on to the next step here. For those of you who already have a retirement plan, whether it be a SEP IRA, a simple IRA, it might make sense to reevaluate to determine whether a 401k makes sense. In other words, upgrading to a bigger plan with more tax deductions and more options. Now, granted, there are more costs involved with a traditional 401k as opposed to the SEP and simple IRAs, which are cheaper, administratively speaking. But when you start calculating the tax savings in to the larger contribution rates that are offered by traditional 401k plans and owner Ks, the costs become minuscule, if not completely wiped out pretty quickly. It all depends on your taxable income, of course, but I think it makes a lot of sense to revisit your retirement plan and see if the plan you have right now still makes sense for you, or if it makes sense to make a change in the type of plan. Another thing, if you already have a 401k, obviously we can not only increase your tax deductions to keep more of your income this year in 2020 and not give so much of it away, but you can also reduce the costs of your retirement plan if you already have a 401k. So some of the costs you could reduce would be third-party administration fees, so TPA fees. There's bundled fees that are hidden that you don't necessarily see without getting a proper fee disclosure document. Record-keeping fees, advisory fees can be high. Reduced expense ratios. One of the 401ks, well, two 401ks that we use for our business owner clients have almost all exchange-traded funds, or ETFs for short, which reduce the cost of investments by about 75% across the board. So there's lots of different ways that you can save on the cost of whatever 401k plan you have right now, if you're already maxing it out and already taking advantage of the tax benefits. So just to kind of wrap up today and give you some homework, first of all, if you don't have a 401k, get a second opinion on what kind of retirement plan might make sense for you this year, whether that's a simple SEP, owner K, or a traditional big-time 401k. Just depends on the company, depends on the owner, depends on your income, depends on how many employees you have. There's a lot of variables that go into it, and everyone's different. Every company's different. Second thing, if you have a SEP, simple, traditional, or Roth IRA, get a second opinion. For those of us who've been using smaller retirement plans, it might be time to upgrade. If you have a 401k, so if you have, a traditional 401k, have your staff or someone on your team ask your provider for something called your 408b2 disclosure. This is the industry standard fee disclosure that is legally required to show all of your fees on one document, so that you can then take that document to someone like myself at my company or another professional and get a side-by-side analysis done by a third party to find ways to keep more money in your pocket, as opposed to giving so much of it away through increased deductions, increased plan design strategies, as well as lower costs across the board. So that's all I've got today. Feel free, please, like I said earlier, I know that a lot of the people on this list are probably not business owners, but please feel free to share this episode with your friends and family, and especially those who are business owners. If you'd like to discuss your personal situation further, remember that you never have to be a client to ask a question. If you'd like to set up an introduction call or a Zoom meeting for introduction, just head over to our website. You can actually go to our contact page on our website and schedule something in our calendar right there. As I always say, there are thousands and thousands of podcasts out there, and you chose to listen to ours today. So thank you so much for tuning in. Be sure to subscribe on iTunes and YouTube. And remember, you can sign up at our website at libertaswealth.com to get these updates, as well as other screencasts, videos, articles, and other things we deliver directly to your inbox on a weekly basis. Again, feel free to follow us on Facebook. I'm also on Twitter at Adam Koós, as well as on Instagram at Financial Surgeon. So thank you again so much for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koós. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.